Hi guys, welcome to Filing Dog, where you learn to file your form and then get your financial news. US stock are sinking Tuesday as investors fear that rising oil price and other costs will slow down growth in the company profit. The war began to set in after constructions and mining equipment Caterpillar said it doesn't expect to top its first quarter profit for the rest of the year. Industrial and basic material companies, technology firms are taking some of the worst loss. The Dow Jones Industrial Average was down 500 points in the later afternoon trading. The S&P 500 index sank 45 points, or 1.7%, to 2,625 as 3:40 p.m. Eastern Time. The Dow Jones Industrial Average was down 509 or 2.1% to 20,980. It was down as much as 690 points earlier before paying some of its loss. The Nasdaq Composite dropped 140 points or 2.1% to 6,983. So as you know, Caterpillar have a lot of influence on the market. So uh, Caterpillar executive told analysts on a conference call in the late morning that they don't expect the company to report a large per share profit for the rest of the year. The stock dropped 5.6% to $145.38. Caterpillar products are used in a wide variety of industries, including constructions, power generations, mining, oil, gas drilling, which made the company an important indicator of economic growth. Wall Street shared Caterpillar results earlier in the day after the company has a strong first quarter and raises forecast for the year. In the tech sector, share of Google parent, we're talking about Alphabet, were down more than 4.5%, even after reporting earnings on Monday after the market closed. Also lower, we got Facebook, Amazon, both down 3%. So I understand when the market is in a sell-off, move, fear create, among investors that have impact on other stock market too. Like you say, Google, even though Google report earning on Monday, so that doesn't stop the stock of being down for 4.5%. So one thing that we need to keep in mind also that impact this sell-off is the fact that the 10-year Treasury yield top at 3%. What that mean? The 10-year Treasury yield top at 3%. So understand when the 10-year yield Treasury top 3%, what that mean? So it's an indication that more people now may tend to invest in bond treasury, treasury yield. There is a really guarantee instead of investing in stock. So if the 10-year treasury yield top 3%, so the behavior of some investor would be, let me put my money so in a treasury, let me buy it, and then after that I can wait for a bull market to use that money just to be secure. But it's up right now. It depends on it's the coming weeks. The 10-year treasury yield still going up 3.5%, 4%. That gonna be a real trouble because so many investors will ask themselves why stay in stock when we know stock are really riskier than treasury yield. So you understand the point. So that's why every time you see the 10-year treasury yield cross 3%, so we see investor, taking the money from stock to put it in treasury yield. So that's the way you should understand when the treasury yield top 3%. But like I told you, it's depend of if the stock market keep doing better, So we may have 3.5% to the yield, and then still investor decide, okay, we're gonna let it in the stock market because this is still doing good. That's the way you should understand it. But generally, above 3%, investor may tend to take their money from the stock market and put it into the bond with there is more guarantee. That's the way you should understand it. So let's understand it deeper. Either way it goes. Either way it goes. If investors think that the economy and inflation will agreeable enough over the next decade, they can park money in 10-year treasury. They will buy it. So that means if they have positive, outlook of the future, the 10 years. The fact that there is a demand for the 10 years, that demand will send yield lower. Okay? When investors have good outlook, they are positive for the next decade. But if, on the other hand, investors think we are headed for higher inflations, rocky economy, how they gonna react? Guess what? They will put their money into short-term treasury rather than long-term. So, which means lower demand and the price drop, sending yield higher. So that's why you see when investors are negative about the next decade, they're not gonna buy 10 years treasury, they will buy short term. So 10 years, it's a benchmark that come with 10-year treasury bond that come with being risk free, which make it the one asset to which all others store bond mortgage. Stock are riskier, that than bond treasury. So they have higher expected return with capital gain and dividend than treasury. Treasury are risk-free because they are backed by the US government and its ability to tax, stock, and corporate bond can fail. 3% is used as a key threshold for a number of reasons, but the main reason are mortgage rate, the stock market, and corporate debt. Higher yield also foretell higher borrowing costs for corporations, which can cut profit and investment. The result can be cascade of layoff, stagnant growth, recession, and lower stock price. So that's the way you should understand the fact when the 10 years yield is higher, so this which means investor really don't have a positive outlook of the next 10 years. So that's why they will just take their money from stock and put them in 2 years treasury bond and then wait for the bull market to buy stock again. That's what we should understand. So we hope tomorrow the 10 years treasury yield will not go up, because if this thing keep going up, believe it or not, that will be a tremendous impact on the stock market. Okay. What about the good news for this Tuesday market? The good news was in appliance maker Whirlpool. Whirlpool surpassed Walmart expectation in the first quarter. The maker of Maytag KitchenAid product was 4.4% to $156. So Whirlpool was the good news. Okay, so one more thing also that affected the market negatively was the oil. So we know when the costs rise, that affect tremendously the market. So the oil price is getting up, and then we should consider that also the fact they are talking about this fight between China and USA. So which means it's effectively, you understand, like steel stuff like that. So cost of material going up. If this fight keep going on, that will affect the market tremendously. Okay, so see you tomorrow for an update of the market. It was with you, Falling Dog, for your financial news of the day. Take care of yourself.